All right, let's get in Ben Powell, who's with us now. He's running us through what is the top of mind cues for markets globally. He's chief Middle East and APAC investment strategist at BlackRock Investment Institute. Ben, great to have you with us here. Thank you very much for your time. I mean, let me start. Maybe not very important for the market, but this entire Middle East bit. What do you make of it? If you have any thoughts, not from a market point of view, but just like, what President Trump has said about Gaza and things like that. Would you take it seriously?
Good morning, guys. Great to be with you. Yeah, look, the president has started at an extraordinary pace, I think, across pretty much every dimension, foreign and domestic. So I think every leader, business, government, investment leaders, economists, we're all scrambling to adjust to a very new reality and a new approach, I think it's fair to say, from a U.S. administration who seem very focused on American interests and are quite content to rewrite what have been thought to be kind of historical norms. So those historical norms started really earlier this week with the seeming tariffing of Mexico and Canada. Canada, obviously, a huge close ally of America, but that didn't save them from being on the list, at least for some period of time. Those tariffs subsequently didn't come to pass, at least for now. And to your question, yeah, the Middle East, like everywhere else, we're all looking, I guess, tweet by tweet, Truth Social post by Truth Social post as to what's going to happen next. And that would apparently include some historically astonishing proposals, at least. That's how far they can go in terms of significant changes here in the Middle East.
Ben, hi. Good morning. Great to have you in with us this Friday morning. On tariffs, I just wanted to get your sense, because the market seems to be now veering around to a view that this is not going to be that bad. I mean, that disruptive. It'll be volatile, yes, but it won't kind of, not the end of the world kind of a scenario, because I was looking at the Hang Seng, and believe it or not, the Hang Seng has had actually a great month. The index is up almost 7-8%. The Chinese markets, after their holiday, they've been moving higher. So investors don't seem that worried about an Armageddon situation with respect to tariffs. So do you feel that to some extent we've kind of seen the worst?
Maybe. I think on China, the change has been because they were super worried, right? So they are now only quite worried, which is a positive improvement, I suppose. When now you compare that with Canada, I think Canada, 10 days ago, didn't really expect to be at the kind of front of the queue in terms of proposed 25% tariffs. So as we all understand, life's all about expectations. And then what happens? It's the change in. So China, I think, was really expecting a hyper-aggressive approach. And so far, actually, the approach, I mean, it's been meaningful, right? We've had new tariffs slapped on China from the US, so stuff has happened. But so far, it seems like the market was discounting even worse. The big kind of unknown is if and when President Xi and President Trump might meet. So today, we've got the Japanese Prime Minister at the White House. It's sort of a parade of leaders going across to either the White House or Mar-a-Lago to meet President Trump. I think it's not just the Chinese. We're all waiting for kind of the big one, which is, can there be a grand bargain, if you like, struck between the two hyperpowers of our time or not? And that is unclear at this stage. President Trump has given some kind of positive noises around that. I think that's also helped Chinese risk in the short term, but that is a big unknown. Can they get together? Can there be some sort of agreement across different dimensions, which can give us a bit more clarity? We'll have to see.
All right, Ben, we'll leave it there. Thank you very much for joining us. Good conversation as always, shorter, but always useful. Well, let's